up, everyone? Welcome to the show. Hope you're all doing well. I hope you all had a nice weekend. It is Monday, and it is a brand new week, and we have some big news here. Today it is the US and China pause on tariffs after the talks in Geneva. Both sides agreeing to lower their tariffs. The US from 45% to 30%, China from 125% to 10%. Of course, all those percentages, they don't matter that much because tariffs at that kind of level really meant that there was no more trade between China and the US, and a dislocation like that of the world economy was, of course, very, very bad for both sides. So now, after threatening each other with total economic annihilation, they both have decided to sort of come back on their position and decided to go and negotiate in Geneva, neutral territory. And now, as the negotiations are underway, they have agreed to lower the tariffs, which of course can only mean good things for the market. And today we are seeing the market pumping up a big time. We're going to have a look at that. But before we do, since it is Monday, we're going to have a quick look here at what is going to happen this week. And we have a big week if we look at the economic calendar right here. So today, Monday, not so much, just some Fed speak here on Monday morning. But it is tomorrow, the big one, the big enchilada, core CPI coming in. And perhaps this could be a reversal depending on what the result is going to be, if we're within expectations or not. If we're not, and if we have a hot CPI day, then perhaps we can see a turnaround. You know, it's sort of like back in the last live stream, of course, when everybody was super bearish and we're saying, well, when the sentiment is bearish like that, overly bearish, then it can only be good for the market, because when everybody has sold already and there's no more sellers left, then the only way for the market to go is up. And now we're seeing perhaps the opposite sentiment, where the good news is coming in. Everybody is now turning bullish, saying, oh, well, the worst of the crisis is over. Now they're negotiating. And perhaps tomorrow we get a core CPI and we get a number that is going to be above the expectations. And then everybody's going to be like, oh my God, actually we were all bullish yesterday, and now the bad news is coming back in and it is actually time to sell. So perhaps this is the moment where we could have a local top. And we're going to look at the charts in a few minutes here. And we're going to have a look at sort of the potential direction for the market here. It would be the right time here for the market to put in a local top so we can put in a higher low, and we could go on here in the next coming months to sort of skyrocket up. We're going to see what's going to happen. But let's have a look here at the rest of the economic calendar. More Fed speak on Wednesday, big time here, with 3 speakers. And then on Thursday, it's going to be PPI day. It's going to be sort of a double whammy, perhaps, depending on what the numbers are going to be. But we're going to have CPI and PPI. We're going to have a better idea where this economy stands in regards to inflation and the consequences of the tariffs, and perhaps we're going to have an indication as to why there is some relief on the tariff side from this China-US trade war. Perhaps some damage to the economy is being done, and now both sides are sort of seeking a last-minute truce so that their economies don't go into a tailspin. And we've seen sort of how bad things have been on the Chinese side here on the internet, seeing ports empty, complete stop of trade between the two sides, and warehouses filled with goods that cannot find any buyers. And of course, this cannot last for very long. On Friday here, we're going to have housing starts, And it will be sort of the end of the week here, but the big days of data here is going to be Thursday and tomorrow, Tuesday. So let's go back here to our news on Twitter. And let's have a quick look here at Scott Bessent talking about this deal between the two sides. Deal between the two sides.
To what was a very positive process. We have reached an agreement on a 90-day pause and substantially moved down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down 115%. We had very...
Wow, you could not be more enthusiastic. It's very strange. Like, he seems very nervous talking like this, and it is perhaps something that shouldn't inspire too much confidence here. He seems a lot less confident talking about these tariffs being stopped, that the implementation of the tariffs themselves. And we're going to see tomorrow, perhaps with CPI, is there some damage here that is being done to the economy? Are we going to have a resurgence of inflation? Everybody thought inflation was vanquished. Perhaps it is not the case. Perhaps also then with PPI, we're going to see some slowdown in the economy. Let's have a look here at the comments a little bit over on the side of Twitter about the tariffs. Peter Schiff here saying, now that Trump has surrendered in the China trade war, he never had the cards to win. What's next? I think the news is as good as it gets. Can only get worse if war re-escalates. Now focus may return to the deficit exploding budget that's working its way through Congress. Well, you know, Peter Schiff has been wrong on many occasions, sort of like Jim Cramer. But perhaps here he points out something that is accurate, that now that we have the good news, well, perhaps the only thing left for us to get is some more bad news. Mohamed El Arian here saying a large 90-day coordinated tariff reduction by the world's two largest economies from 125% to 10% for China and from 145% to 30% for the US has spurred major global market movements, including higher stocks and bond yields, a stronger dollar, a rise in oil prices, and a lower gold. And a great summary here from Mohamed El Arian as usual. And the thing that we're going to have to watch is, of course, the bond yield and what are the consequences of this rise in yields. And, you know, it is sort of the opposite of what we saw during the first part of this trade war, with the tariffs being implemented, the stocks being lower. And one thing is that the bond yields, they just keep going up. And that's going to be something that governments are going to have to deal with. Their borrowing cost is going higher. And how is that going to impact the deficits? As Peter Schiff was saying just on the earlier tweet, this is going to be pretty bad. But of course, we knew that was going to be the case. If you've been subscribed to the channel, if you've been following us, then you know for more than a year now, we've been talking about this dynamic in the markets. It will become increasingly harder for governments to borrow money as simply as their deficits keep increasing, and this is only a one-way dynamic. There is absolutely no indication anywhere in the world that governments can actually rein their spending and bring some kind of austerity to their budgets. Everybody keeps on spending more and there is no more money. Therefore, bond yields have to go up all across the board, all across the world. Next one here, this one is very, very interesting here from Simon Godek, saying developing Macron, Starmer, and Merz caught on video on their return from Kiev. A bag of white powder on the table. Macron quickly pockets it. Merz hides the spoon. No explanation given. Zelensky, non-cocaine enthusiast, had just hosted them connect the dots. We're going to have a look at this here. How incredible. So here is the incriminating little white packet here. There's the spoon over here. And we see these guys, and you know, just watch their reaction and their facial expression, their body language. It couldn't be more incriminating. Let's watch this.
It's a long walk. I'll be back in Poland.
Just look at Macron.
It's literally. We came through Germany, and then we made it to France.
Bedroom and
we got through the border.
And here he comes. Watch the little bag. Oops. For the picture, let's not have the white bag in the picture. Look at Macron. And then he takes it and he puts it in his pocket. Incredible. And if you're not sure because you're like, oh, well, we don't see it that well, let's look at the replay, the second angle, just like in sports. Here, a better angle. Hip the spoon from Merz. Oop, the baggie for Macron. And a nice picture here. And just look at his face here. Is basically, you know, he's just been caught red-handed. He goes with his hand with the other end to hide the bag and put it in the pocket. How ridiculous is that? And so if you're wondering why is it that this world is going to hell here, maybe here is part of your answer. But now we're going to move on here to the markets. And we're going to have a look here at the SP 500. And if you remember at the last live stream here, we were about this level here. We were going onto this breakout of the downward trend line here. And as we're saying, you know, this is probably a good spot to place a trade here. And indeed now, since then, we've moved on about 6.7% here and a 3% move today here. Let's have a quick look at the indices. As you can see here, the Dow Jones up 2.7, S&P 3.1, Nasdaq almost 4%, 3.9. The Dixie is 1.5% up. VIX is down majorly. Bitcoin down a little bit here, 2.4% after a strong run. Ethereum about the same, 2.6%. And the yields across the board, as we've said, they are going up. Let's move on here to the metals. Gold is down 3%. And of course, all this is bad for gold because, you know, gold sort of was riding on the uncertainty of the tariffs and the geopolitical situation. And we're seeing silver down 1% here. So what is the next step here? Now we're getting at the top here of these moving averages, and we're going to enter here some kind of resistance. And it's not surprising that things are being blocked here. As you can see here, this is a level that has been used as support. Now we're going here and it's going to turn into some kind of resistance. And as for you know, what could happen going on forward, well, we could probably chop for a little while here and get rejected here, so that then we can find perhaps some more support here a little lower, and that could allow us to make a base to then perhaps move on higher and go back to sort of the top of this this upwards trend line here, this megaphone pattern. that we were sort of the topping pattern here of the S&P. And if we were to do something like that, sort of to find support here at the bottom trend line, and then to perhaps get some resistance here at the top, that would make sense, and that would give us perhaps a local top here. And then we would scare a lot of people who entered the trade here. Those who sold here basically bought just as we're arriving here at this resistance zone. Then the market could turn against them, go down, flush them out once again, to then go up and go a little bit onto a lockout mode. If we get a here, that would be around mid-July, if we get some sort of finalized trade deal between China and the US mid-July, after a little scare perhaps, then that could be the catalyst here for a resurgence of this market around Q3, Q4 here, and we could move on higher. Let's have a quick look here at what's in the individual stocks. Let's see here. Apple is up big time here, 6%. Adobe 3.2. What do we have? Amazon 8%. ASML 5.6, Coinbase 3.6, despite Bitcoin being down. What else do we have here? Overall, the market is going up, perhaps except for Netflix here, minus 2%, Nike plus 7%. So all those stocks that were hurt pretty badly from those trade deals, now they are seeing the exact opposite, and they're going up big time. Let's have a look here at Bitcoin now. So Bitcoin was the same situation back then. If you remember here, some days ago, a couple of weeks ago perhaps, we were at the same thing, breaking out from this downwards trend line, and same thing, we are saying this is a good opportunity. Market has moved significantly for Bitcoin, sort of front running the stock market, up 26% on Bitcoin here since the breakout of this trend line. And now we're same thing, we're moving into some resistance, and we're seeing here Bitcoin sort of rejected here at this trend line. And this is probably going to be, we had our little fractal here. What is happening? We had our little fractal here, and so far, ever since that point, really in November of last year, right after the election, we've been following here this fractal. That is the fractal from the previous bull market and the topping pattern of the previous bull market, and now we're sort of following it to the T, and perhaps we're even a little faster than what it was last time around. And now we're sort of getting into this phase. Perhaps same thing here. We will see some kind of rejection here on this trend line just to move down, and we'll have to see how far down we can go. And then perhaps same thing around mid-July, we could put in a bottom, so then we could have a rally in the last part of the year, Q3, Q4. Usually Bitcoin tends to do very well in at the end of Q3, beginning of Q4, all before the end of the year. And perhaps we could have something like that here. We will see. Of course, this Bitcoin moves very fast, so we'll have to see what is happening here. Let me get back here on Bitcoin. But for now, I guess we could see a local top here, a little bit of a rejection here, and it makes sense after running so much here, Bitcoin. There will be some people taking profits after a 26% run here. The people who bought at the bottom at the local bottom here, they're going to be taking profits. And Bitcoin runs so much on sentiment that when you see a little drop like this, then the people who just bought it here, they're probably going to give up until we get some basing. But perhaps we could find some support here at 100 and go again, or perhaps it will go down further down to this trend line here at 95. Some interim levels of support here. We'll have to see, but for now it seems that the trend would be down a little bit. So let's have a look here at Ethereum, because Ethereum has been also following the same movement, but as it is often the case with Ethereum, as you can see here, an absolute massive move here for ETH, going up 46%. Look at that. And Ethereum, of course, being a lot more volatile because it is a smaller market after all than Bitcoin. And it has been a pretty good trade, and it's been very, very straightforward here. You can see there has been no dip in this run for ETH. ETH that has been performing pretty poorly when you compare it to Bitcoin. As a reminder, at the bottom of the bear market, ETH was about $900 or something like that, and we went down here significantly on ETH when Bitcoin just went to about 70,000. ETH went all the way down to about 1,400, so just $500 more than the bottom of the bear market, when at the bottom of the bear market Bitcoin was $15,000. Here Bitcoin was $70,000 and ETH was barely up from the bottom of the bear market. So a pretty bad performance. If we look here at ETH BTC and we have a look at it sort of long-term view at ETH BTC, then you can see really how terrible ETH has performed compared to BTC here. We've gone down massively since the top here. That was in 21. And we've gone down almost 80% on the valuation of ETH compared to BTC. So that means that if you had your money in ETH, then you lost 80% of the value in terms of Bitcoin. It was much better to be in Bitcoin over the last 4 years. And, perhaps it talks about what's happening in the crypto world, how ETH used to have this dominant position when it came to altcoin, when it came to stable coins. Sort of all the tech was happening on ETH, and now it is not the case. There are other chains like Solana, like Sui, like BNB that have done really well, especially Solana. If we look here at Solana, as you can see, you don't see a drop as dramatic. As a matter of fact, you see that from the low here in 2023, we're almost back to the level of 2021 for Solana. We even briefly went up, meaning that, if you were in Solana, you're probably even with BTC or a little bit lower, slightly lower. But if you were in ETH, then you've been flushed out. You've lost 80% of the value of your crypto in terms of Bitcoin. And, that tells you, how well Solana has done against Ethereum. And perhaps it is sort of the next, the next altcoin or perhaps now it has really sort of eaten ETH dinner, you could say, and it is doing much better than ETH. But perhaps now that we're entering sort of the last phase of the bull market for Bitcoin, perhaps ETH can wake up and go on a run here. A 40% move, 46% move here from the bottom. It is pretty good. So now that we've said all that, we are going to have a quick look now at what the talking heads are saying. Let's move on here.
.com.
to CNBC, and what are they talking about? They're talking about what we're talking about. They're talking about Bitcoin here, Ether, Solana, and now you see you have Solana
is America's premier.
that is actually being listed here on CNBC. Before it was just Bitcoin, and then it was Ethereum, and now they're even talking about Solana on CNBC, a major network, and it shows you that something is happening with Solana, and perhaps now in the next coming months, depending on what's happening with all the regulations around crypto, we could see perhaps some Solana ETFs being rolled into the market. And if that is the case, then we've seen for Bitcoin, for Ethereum, how it has been very, very bullish for these cryptos to have access to capital markets, to traditional capital markets, and how it leads to a massive inflow of capital into these assets. And if that would be the case, then perhaps the price of Solana could be pumping big time, and perhaps the run that we've seen on Solana over the last few years is really the market front running a possible listing for Solana ETFs. So we're gonna see now, what else do they say? S&P 3.2, pretty big move in the market, 4.3 for the NASDAQ. And we're gonna see, tomorrow is going to be sort of a reveal day, because a market move like this, on a very good news, just like Peter Schiff was saying, when the market moves positively like this on some good news, then sort of once this is digested by the market, then it's only primed to reverse, because you cannot sustain something like that. And especially tomorrow with the CPI, we could have some pretty bad news, or at least we could have some enthusiasm that can be stopped here if we have a CPI reading that is above the levels that are expected. We will see tomorrow. We'll have that CPI day, and let's see what they're going to be saying now on CNBC. What is going to be the topic here?
Streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
$15 for CNBC Plus. Like, why?
Welcome back. The removal of some tariff uncertainty now, let's call it that, could help seal some of those cracks we've seen forming around the consumer. Take recent commentary in the travel space, where Delta has cut growth plans, Expedia lowered booking guidance, Marriott trimmed its forecast, and look at the stocks with some big declines over the past 3 months. Delta still 23% below those recent highs. But yes, we've seen a bounce back in recent weeks. So what should we expect from the space going forward? MasterCard, conveniently, is out with their 2025 travel report. And joining us now for a First on CNBC interview is Michelle Meyer, Chief Economist and Head of the MasterCard Economics Institute. And here in person.
Yes, it's so fun to be here.
Great. It's not quite the sphere, and this is my sphere. This is like me watching the great, Michelle and I getting to wonk out about whatever. So is it as bad as people say, or no?
Not at all. We're
here.
Looking at the
Let's
travel
move on
economy in terms of what
Charles
we're
Payne
seeing.
on Fox.
David Botson. So just real quick on the deal, just your initial thoughts. It's obviously movement in the right direction.
Absolutely, and it's really good relief for small business that now they can use the next 90 days to fortify inventories, to get products on shore. I think that it's a much more dramatic move over the weekend than markets had been expecting, hence the rally today, Charles.
And we'll have a Christmas. Over the next 90 days, we'll get all those Christmas gifts in. One thing that you talk about a lot, but you had it in your last note that I saw, the PE ratio, particularly the E part of this. It had come down a lot. It's back above 10 and long-term historic, the 5 and 10-year average.
Yeah.
Why is this so important for you?
Well, look, I think that your entry point matters a lot in terms of expected future returns. But you can even see all these years, the PE of the market was below 18. It's averaged about 16, 17 over 30 years. But it isn't usually there. It's usually above it or below it.
Right.
That's okay. It's just that what you can see is it's not exactly cheap. And this is even in a period where the market had been down 20% from mid-February through early April. It was still holding in at an above average multiple.
And this is somewhat of a confusing chart, folks, but it's sort of saying the same thing, that over the next 10 years, the higher the PE ratio is, the lower the return over the next 10 years. So the markets can get over their skis a little bit here. And that's one thing you always try to have people cautious on. You're also excited about the fact that what we're seeing in the market is moving away from the Mag 7. You think that's healthy?
Well, you can't rely on a couple $3 trillion companies to become $6 trillion companies. It's really tough math if that's what your whole investment strategy is. Look, it's very hard to become a $6 trillion company.
Right.
The fact of the matter is some of the other sectors in the market.
More interesting analysis here than was the case on CNBC with their travel stocks or whatever. Interestingly, they put a slide here on Fox by Bravos Research, and if you know, if you've been on the side of the internet, Bravos Research, it is former Game of Trades, a YouTube channel, and now their research is being used on financial TV. Pretty interesting here.
Really moving up. You see industrials. So there's some more pro-cyclical stuff besides technology that is catching a bid.
Yeah, I love that, by the way. I'm overweight industrials.
Yeah.
This is a chart I know you love, right? This is the dividend growers. If you put $100 in the market way back when, if you bought the dividend growers, explain those dividend growers.
See, what I hear all the time is, David, your dividend growth is such a great strategy. It's a little lower risk, and you're going to get a lower return, but it does well. And I say, I'm just telling you, I don't believe you have to sacrifice return for the better result of dividend growth. You're getting income, you're getting growing income. You do get a little less volatility, but as you can clearly see, you haven't had to give up return to get that. The dividend growers, why do they do better? Is it because of getting the dividend? Sure, but it's also that they're better companies.
Right.
The companies themselves that are able to sustain a growing dividend over multiple decades, they themselves have better balance sheets, better management, better business models.
So let's talk about something that you like here. IBM has been a favorite.
And you know, I would argue the exact opposite of what he's saying here about dividend stocks. You know, if a company is giving out dividends, it means they're returning capital to the shareholders because they have nothing better to do with their money. They don't have a business that can actually scale up. There is no reason for them to actually do CapEx, to spend their money, to do something to improve the business, because the business is pretty much stagnant, and therefore they're going to give dividends out. And when you get dividends, it's sort of trying to sweeten the deal. They're paying you for you to hold the stocks, and the reason for that is because the stocks is not going to perform as well, and so they're giving you an incentive to have their stock and to hold their stock, where you could be into another company that has major growth, that is growing, that has that requires capital to improve their business, and that company wouldn't pay you a dividend because they have better things to do with the capital. And therefore, if you invest in those companies that have higher growth, then your return is going to be much better. And if you invest, over a long time, you'll see some dividend stocks, they'll do pretty well, especially those big companies. They'll be, somewhat stable, and you get that income that is sort of something that you can expect, from the future. But overall, if you're an investor, then perhaps dividend stocks is good for you. If you're just a trader, if you're just someone who's betting on the price of a stock, then usually dividend stocks, they're not going to do much, but growth stocks are going to go very, very high, very fast. And also, of course, they're going to go very low, very fast, depending on what is happening in the market. But, if you're a trader, dividend stocks is pretty much not something that is going to do very well for you. There's better opportunities out there. let's go now. Let's move on to Bloomberg, since we have the commercial here. Let's see what these guys are saying.
Our hope would be at some stage to get to
very
16
low.
games,
They talk very
in the
low
next
on
few
Bloomberg.
years. We think we could do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Or do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
From the world of politics to the world of business,
no
Joe Matthew and Kaylee
NFL
Lines
franchises.
deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, yes, indeed, everybody. You are listening and watching Bloomberg Business Week Daily. Carol Masser along with Matt Miller. Matt in for Tim Stenovec on this Monday. We do have a rally underway.
I feel like, there's so many people who, after April 2nd, right, we got the tariffs announcement after the market closed, and then on April 3rd, April 4th, and then April 7th, there's just in free fall. And so many people are like, I could have seen this coming. Why didn't I sell my stocks? And now we worked our way all the way back up to and above that point.
Right.
So anybody who is saying that then...
Sell now?
Sell now.
Even though the president says buy now.
Well, that was last week, right?
I know. Listen, I agree with you. This is why fundamentally what has changed is I think, an important question. Let's take a look at some stocks on the move this week. I am Carol Masser along with Matt Miller. With us is Christina Aquino, managing editor for Bloomberg Markets Live blog. Let's start with...
And isn't it hilarious that they all look like streamers now? It's not even TV anymore. Now they all look like they're doing some Twitch live stream.
Senior unsecured notes, and the proceeds of that will be used to refinance its debt maturing next year. As you may recall, Chief Financial Officer David Bernstein was saying that paying down debt was, quote, priority 1, 2, and 3 at their most recent earnings calls. So investors really appreciating that they're able to do this at a particular time when the rally in risk assets is really benefiting demand for this sort of debt.
We're talking about the cruise lines, though, right?
Right,
Is that
yes, Carnival the cruise lines, yeah.
I think what's interesting is, man, they did take on a lot of debt during the pandemic. We saw that in a big way. And I know Fitch, pointing out that it's expected to decline to $27 billion at the end of this year from $36 billion in 2022. Yes. That has been priority 1. I talked a lot with the CEO of that company, and that has certainly been a priority for them. But in the meantime, their business looks pretty good. I mean, they're very upbeat about people wanting to take, get on a cruise ship.
Still, yeah,
in a big way.
What are the other stocks you're looking at?
Nobody wants to get on a cruise ship. This is what we were talking about earlier. Those businesses that don't really have anywhere to go. Cruises was really something of the previous generation. I don't see young people, wanting to go on a cruise out there. And I don't think that, all these cruise lines, companies, that they're going to do very well going on in the future. Especially as, the boomers stop taking those trips, then I don't see any young people really taking up the mantle and going, on a cruise ship for 2 weeks, being stuck at sea for no reason. I think, now there's there's things that young people look forward to, and being in the middle of the ocean on a boat is definitely not something that young people are gonna like. It's sort of a generational thing where the boomer generation, they got sold a lot of sort of hobbies, of pastimes, of vacation styles that this new generation absolutely is not down with.
Is optional, and maybe a CFO is going to prefer to buy shares.
Right, if you have to make differences, right, or make choices. Yeah. NRG, by the way, the #1 gainer in the S&P 500. Cigna going in the other direction
Cigna,
today.
Exactly. One of the stocks that is in the red at the moment, down more than 6%. And that's after President Donald Trump spoke earlier, proposing his plan to cut out the drug industry middlemen as a way to reduce drug costs. So very interesting, right? The president's executive order focusing not so much on the makers of these drugs, but the middlemen involved in the process of selling them and getting them to the public. And so now we have
negotiating the pricing.
Exactly.
Like that's a big part of right.
And of course, that's going to affect all those healthcare companies a lot. The healthcare business is an absolute racket, especially in the United States. And nobody really wants lower prices except for the consumer. But, from the insurance companies to the insurance providers, then them juicing up the price of healthcare and healthcare related expenses is very good for them, and even the government, of course. Now with Obamacare, it was sort of a green light for those companies to keep raising their prices year after year after year and suffer no consequences. Let's go on one last time here to Fox News before we call it a day.
Let's talk about Netflix. You cashed in on Netflix already?
Today, yes. I think what's happened is worst is becoming first, and I think first is becoming last. Not 100% sure, but we have a market now where everything that I've been saying to avoid for months bottomed around April 22nd with the confirmation day. We started buying right after that. And now I think with the end of the China episode, and I do believe it's going to be the end, everything that the semiconductors, the transports, the financials, retail have all turned up the right side, and I think other things may come down. And I think we're seeing it also in other areas that have been strong, like gold, auto parts, retail, the exchanges. So I'm looking to go elsewhere. We own the broad market right now. We'll add there too, as we expect markets to go higher, notwithstanding any pullbacks near term. But we decided to cash that in, and we can be wrong.
I want to get your thoughts on small caps. They hit my radar.
And it looks like it could very well be right. You see a total topping pattern here on Netflix. Netflix, I'm not sure what they're running on. What is this enthusiasm from the market for this company? I don't think it is a company that I think it's massively overvalued, to be honest. Netflix could go down very, very quickly. They could bleed out customers very, very quickly. There is so much competition in the streaming market. And, their shows are not that good. It's not like they have a moat around their business where, they have all the best shows, they have all the best actors, they have all the best directors, and no one can poach those people away from them. It's quite the opposite, actually. They don't have the talent. Their shows are terrible. It's a low quality type of shows, and somehow people keep paying for it, increasing the prices of subscription sort of year after year. But eventually they're going to come to the realization that there's better options, there's better streaming services out there that provide actually better quality content at a lower price. And when that day comes, when the people who sort of had their Netflix subscription for months or years without ever watching it, just once in a blue moon watching a show, eventually they're going to realize, oh, well, there's this other streaming service that is actually a fraction of the price of Netflix, and it actually has the shows that I want to watch. And when that day comes and the market realizes that, then Netflix is going to go down big time. And, you have to remember, just 2 years ago, Netflix was around 160. Today, Netflix is at 1,000. So, what has justified really the increase of the stock price of Netflix? Who knows? Perhaps just dubious speculation. we're seeing now the claimant countdown. Let's see what she
90-day
says.
U.S.-China trade agreement. The Dow Jones Industrials right now up 1,091 points at the moment. High of the session, 1,159. So really not far from it. The S&P 500 gaining 169 points. That's good for a 3% jump. The NASDAQ, it's absolutely exploding. 727 points higher, or 4%. And has entered a new bull market. Look at the Russell 2000 doing wonderfully here, above 2,090 at the moment, up 3.33%, or 67 points. And we were looking at all the winners and losers, right? If there is one stock that maybe best represents the euphoria that we're seeing in the wake of the de-escalation in the tariff war with China, it's a name you might not have heard of, but you will understand right away its significance. Matson Inc., ticker MATX. This is a 143-year-old ocean freight transportation company based in Hawaii. It is going parabolic right now, jumping 20%. It's at the very top of the Dow Transports. It keys right into the U.S.-China tariff story because it offers expedited freight service to and from China of everything from commodities to building materials, automobiles, household goods, livestock, seafood, clothing, footwear, all things retail. Just a week ago, Matson was forced to lower its full-year outlook due to trade war uncertainty, but today, at least they've got a 90-day window of certainty. Shares are soaring and hoisting the Dow Transports up. Look at the transports, and if you compare them to the other major indices, they're jumping the most. 7% for the transports, up 980 points, all on the back of the truce struck this weekend by U.S. Treasury Secretary Scott Bessent and China's Vice Premier He Lifeng. While it is temporary, both sides agreed to massive reductions in their tariffs. The U.S. and China taking a machete first to the levies they had placed on goods over the past month from either country. The U.S. chopping its 145% tariff down to 30%. China slashing its 125% retaliatory tariffs down to just 10%. China will suspend its countermeasures it had imposed on the U.S. since President Trump slapped blanket tariffs on the world April 2nd. That is expected to include China's ban on rare earth exports. These reductions, we stress, last 90 days. Now, it's not rare earths, but retail that is getting the biggest bump on the news.
All right, and that was a pretty good summary. And we're seeing here the numbers sort of all over the place from the tariffs that remain. It seemed earlier that it was 30% that would remain on the U.S. side. Now they're saying 10%. Absolute confusion, and it has been very much throughout all this tariff saga that the numbers have been all over the place. The implementation of the tariffs themselves have been all over the place. We don't really know if they've been implemented or if they've not been implemented, if it was just sort of some press releases and tough talk, or if there was actually some truth to what the announcements were. But, you know, so far, I guess it is a pretty decent summary of the situation here. The tariffs, it seems, will be on pause, around perhaps 10%. We don't know exactly, and perhaps this will change and evolve as the negotiations are underway. But for the time being, it will seem that the U.S. and China are on the way to negotiate some kind of trade deal. There will be a lower tariff following that, depending on how the negotiations go. Of course, things can be reversed. And if there is a problem in this negotiation process, all this could sort of be scrapped and the market could go down. But for now, as of today, it is optimism as we wait tomorrow for CPI day. So that is it for today. Thank you for coming on this live stream. Thank you for watching us. Don't forget to subscribe to the channel and leave a like if you don't mind. And I will see you all on the next one. Peace.
Hit me with that like and sub to the channel. Hit me with that like and click the effing bell. Click that bit, alright. The algo recommends for she gon' like. The algo knows you well. Hit me with that like. Subscribe to the channel. Hit me with that like and click the effing bell.